Righto, buddy miners. The Murchison. Holy snap and duck shit.
I thought you were gonna
all go yesty.
I thought you were going to talk about Paladin Fusion.
No, I'm just trying to keep balanced as much as I wanted to. But nah, this is the foundation. The Spartan recap all happened when Money of Mine started.
So
it was one of our first little bloody in the weedsy, fucking in the deal room sort of things.
It was good, yeah. For people that haven't heard our view on how it's going to play out, we're going to air it for the 15th time today. So let's get into it.
Right, the Spartan raid. We bet on bloody the Paladin Fission proposed deal. What me best mates on Twitter think about it. And JD, you're into Coronado, eh?
Yeah, well, we were asking the question over the past couple of weeks, what's going on here with Sev.en buying 51% from EMG, and lo and behold, it's fallen over. So we're going to tack on a bit of news about the broader sort of ESG thematic type investing, if you like, as well onto that segment, and I think that'll be a wrap.
Let's pump it up. Let's
go.
Get the bell out of the road, JD.
All right, ding, ding, ding. Ding, ding, ding. I own a couple Spartan. So what happened yesterday, we got a email fall into our inbox saying Citigroup, the desk at Citi, were looking for sellers of between 10% and 19.99% of the shares on issue from Spartan Resources. So they claimed that they had 4.75% of the issued capital lined up to be taken, although there was a minimum threshold of 10% of the company. Then this morning we see a couple lines cross. We actually saw two lines of 98 million. One of them is a mistake from what we can surmise yet.
Yeah.
Plus a line of 52 million. So 1.1 billion shares on issue, 150 million shares changing hands at 89 cents a piece. I believe they closed in and around the 82 cent mark yesterday. So that's a value of $134 million, or 13.6% of the company, before taking in performance rights into account. So
is that, JD, is that 4.75 that was lined up already, that is inclusive of the 13%?
You're right. Yep. That's inclusive. So if all those performance rights vest, which there is a good chance that they will, that stake will be 12.9% of the company, just doing some back of the envelope math there.
Right, so that 4.75% lined up, it sounds like that may have come from an existing shareholder and then they built the book for the remaining 9-odd%.
I don't know how it works. I'd love to get some more colour on the execution side of things, because it's you can do a raid where you don't actually, like, these big scale M&A, you can basically build a position without actually having to buy on market beforehand. They can structure these funky equity derivative swap kind of instruments. I need to do some more work to understand all that stuff better. But if you look at real funky M&A, there's all of these types of instruments you can use to actually. So that 4.7%, I don't know if it was actually like Ramelius were there with, or whoever it was there with 4.75%, or Citi had conjured it and structured an instrument that enabled Ramelius to synthetically potentially have that much at that point in time. Or whatever.
Digby Gilmore, if you're listening, Trav wants to come for a couple of days work experience on the Insto
Canaccord
desk.
don't do this.
Canaccord,
This is big bulge bracket kind of funky stuff. Canaccord absent in this kind of stuff. That's probably why you see Citi on this.
Yeah. So it leaves the company with a bit of buzz this morning, up 10%. 90 cents is where they're trading at, $990 million roughly market cap, undiluted. So the buyer, I think we've already kind of said it. The logical buyer is Ramelius.
Yes, not caveat, not confirmed. But
confirmed.
Pretty bloody confirmed, isn't it?
Yeah. So we know they need growth. We know
Geez, it'll be the biggest fucking mistake we've ever made if it's not Ramelius.
We've probably made worse.
We know they need growth. They're in their neck of the woods. Dalgranger up there. We've gone into it so many times. We don't need to flesh out all the rationale again. But there is one thing to factor in, I think, because a lot of people might be thinking, if it is Ramelius, you think sooner or later they're just going to buy the whole lot. So why would you sell into this? And Ramelius buying up to 20% here, why don't I just hang on for a premium if they're going to buy the whole thing? And there's this thing, truth in takeovers, it relates to a whole bunch of different rules. In this case, the one that's that really matters is that Ramelius can't bid for 4 months after the date that this completes.
Is that because they basically, in this raid, there was like an indication that the buyer was not interested in presently, lobbing a change of control?
Exactly right. We'll flash up a little box that they marked in the term sheet, and it says the acquirer has no intention to acquire, control, or make a takeover.
Well, it's not clean cut. In this case, it probably is, but like just because you want 20% doesn't always mean you want 100%. Sometimes you can find a way to get control. Think of like in the case of MinRes owning 20% stake in the lithium shitco's, they just want to feed their existing infrastructure potentially as opposed to actually own them. Maybe Ramelius could take a leaf out of that book and they just find a way to get never to their existing mill instead,
Or maybe
but that's far-fetched here.
Or just an easy way to get their dirt into the never into the Dalgaranga mill.
Yeah, it's not a true rule that just because you want 20%, you want 100%.
Yeah, it's in the specific case here that we're posing the question. So on the flip side of that, you've got the people selling the stock, and all indications sort of point to it being a major shareholder. By the way, it was sort of framed 4.75%. Sounds like it's coming all from the one shareholder. We know following the last raise that Tembo owned 15%, Deutsche Balaton hold 12%. 1832 held 6% prior. They didn't put out a change in substantial posts, so get the feeling that they might have participated pro rata. Tembo would appear on the outset the most commercial and the most sensible seller. They participated in the recap of the business at about 10 cents. They've made 9 times their money in 15 months, give or take. So perhaps a portion of their stock, perhaps they put forward that 4.75 and they put in even more. Remember, this could be multiple sellers banding together. We did also see Mr. Lawson went on a bit of a voyage to London last week, I think, or the week before. Tembo is headquartered there, so just checking in with his major shareholder.
Why would you say Tembo are more logical than Deutsche Balaton? Just because they've
Board
got an extra 3%, or why is that?
I just think they, for me, are an easier investor to understand. I don't get how Deutsche Balaton work. They own weird stakes in companies. They don't seem to sell all that logically. It could very well be Deutsche Balaton selling a portion of their stock as well. That was more a sort of subjective comment on my part.
Yeah, I just think board representation too. Like John Hodder stepped off the board, was like 2 months ago now, whereas you've still got 2 people representing the board of Deutsche Balaton.
Yeah.
2 people, not fucking 1, 2.
Yeah. And the fact that they didn't participate, or the same goes for Deutsche there.
Yeah.
Yeah.
Never gets old, that. Oh, fucking love it. Right. Why City? City's a not really one we see for a book build like this often.
Big international sort of bulge bracket. They're not, as big a presence in the small to mid cap Aussie gold miner space. But you pick the desk that you think that can just get the job done, and perhaps the buyer, Ramelius, as we sort of suspect, we're just confident that City could get the job done here.
So Trav, when you said like this isn't a Canaccord style of thing to do, but like Bell Potter, for instance, they do this sort of stuff for like MinRes.
What if Chris Ellison's fucking high school mate Brad Shallard is doing it for him?
Yeah, so they do.
Okay.
They do it but they do this sort of stuff, but just for MinRes. It's like, do they do it commonly? Who does this stuff, who doesn't? Is what I'm asking.
The big bulge brackets, so UBS, JP Morgan, they do a lot of big...
Barrenjoey, Macquarie, you'll see them. They've got pretty built out in-store sales desks.
Morgan
Stanley.
They'll do block trades. They'll do all these sorts of things. That
more than just block trade, like...
All, I know exactly what you mean. All these sorts of things, but they are just much more active in this end of town.
Yeah. Good landscape education. I like it. Right, so what do we see happening after this? I assume there'll be a change in substantial, or a notice of new substantial holder coming out soon.
Yeah, we would expect to see that imminently. Any sort of day or hour now, I'm sure we will see that one come over. And then, like we said, there's not going to be a takeover if it is Ramelius for 4 months. Not allowed to. So things just keep going from there. You're expecting a new resource pretty soon from Spartan.
Why now?
Very good question.
you've got to think that everything else going on, sort of Westgold, Karora, has to play a role. We know they were interested there. Again, we don't need to get into the details there. You can listen to the episodes we've done on that, but that doesn't seem to be playing out the way, given the takeovers panel is still deliberating and taking their time doing that. But you don't get the feeling it's gone their way, do you?
Well, the read through is that they might, mate. Whether the takeovers panel agitation on that deal was just like a red herring, and the main play was Spartan all along, I don't know. But if you're moving really thoughtfully and actively right now on Spartan, you probably got some read that the takeovers panel is not going to disrupt the deal in the way you sort of thought it might beforehand. Although, mate, Goldfields could still rip that deal apart.
Well, that's my thoughts are sort of the opposite to what you first said, is that they want to put their foot on it. Ramelius would want to put their foot on Spartan right now, so that in case either Goldfields take Karora or the Karora vote doesn't come through for Westgold and Westgold are back in action, they want this stake before they get it. So it might be opportune time.
Yeah, if you own, I mean, they want it as much as 20%, right? Like 19.9. If you own 19.9, it's pretty hard for a deal to be done with anyone other than you with your blessing.
So and you look at so what'd you say? So Tembo had 15. We don't know who's going to be left with what till all the holding things come out. Assuming, like, if we can probably safely assume that Deutscher and Tembo won't have the same shareholding that they do now. There's probably some that's gone somewhere. Yep.
I'd say with confidence at least one of them.
Yeah. But they'll still have likely plus 10% each. And then you've got this new participant, which we're assuming Ramelius, potentially having 15. So you've got 3 substantial shareholders there.
Well,
1851 owns more than 5% as well.
Yeah, so like you got effectively half
1832.
Half the company is held by these 4 major shareholders.
I would anticipate one of them is going to fall below the 10% market. I would think.
Yeah. So let's say there's about a bit under half that's held by these 4 companies. Is there a bit of risk for Spartan losing control of an outcome here, defensibility wise? So if Ramelius want to go for it and they don't, they want to build it themselves.
Who cares? Yeah, that's fine.
They've had a wicked result.
Your responsibility as Spartan is not to just fend off fucking offers at all prices. It's to extract maximum value for shareholders. If Ramelius want to come in and lob a fucking bid for a high price, you should accept that, Spartan. Like Spartan shareholders.
You should get a few people fighting over you. Of course, do your job there.
What if they don't accept it? How do you? Because you've got the major shareholders.
They would need to put a very good sort of narrative together to shareholders as to why they can themselves, if they're going to go it alone, create a better outcome than a bid coming in at a premium.
Totally.
That would be my thinking there.
Yes, interesting times coming up. Fuck that VRIFY model's paid dividends for them.
Jesus,
that
9-bagger. It just paid for itself many times over.
I don't know if you put in, I don't know the exact date when they got verified, but effectively since they've been verified, the share price has done nothing but go up.
Well, I actually think it led to this discovery of Never Never.
Definitely sorted Pepper out.
Yeah. Told him to stop drilling Patient Wolf. It fucking...
Yeah. VRIFY AI, just fucking it's like a message box that comes up. Stop drilling here, you fucking idiot. Drill over here. And that's what they bloody did. And what do you know? Pepper.
Just look at the results.
There, go VRIFY and go. VRIFY makes your share price go northeast with VRIFY.
Helps you find it, and then it helps you communicate it to the market, which helps us talk about it.
If you're a geo out there, just get in the show notes, give Grant an email. It's just going to make your life easier.
Yeah.
And you're going to get a tremendous payday while you're at it.
Just, full... If you're a shareholder in something and you get a VRIFY subscription, it's probably not going to make the share price go up. This is for actual companies. Just to be clear, like it's not as rosy as I say. But anyway,
enough of that.
Yeah, enough of that. On to the bloody yellow cake, mate. I have never felt so part of a community as I do in Twitter right now with my uranium. As I said, it doesn't take much other than saying I like uranium to get brought into the brotherhood. It's bloody great. Low barrier to entry. Right. Well, we were obviously spot on with the Paladin Fission deal that is happening just can't come out just after we bloody dropped the show yesterday.
Yep.
They had the investor call and everything with the Paladin and Fission big dogs. So Paladin proposing to buy Fission Uranium via an all-scrip deal. So Paladin, looking on the Spark chart, Paladin shares off about 5 or 6% today. So, geez, me long Paladin, short boss pod would have shit itself. So, yeah, I would have been out by now anyway.
Your algos would have sorted it out for you, mate.
You're dead. You're dead.
I'm dead. Right, so it's all scrip offer, 25.8% premium to the last close price. They said 30% to the 20-day VBAT. So, though that premium would be a bit lower now. The Paladin shares have dropped 6%. So the interesting part, the Paladin shares going to the Fission shareholders are all going to be listed on the TSX. So Paladin are proposing to have a dual listing. So you'll have the same amount of shares on the ASX, which are currently there now as Paladin shares, and then all these new shares they're issuing to buy Fission will be the ones that are listed on the TSX.
Beauty.
So,
Get into the assets now, Matty. What's going on? I know you painted a good picture of where they sit in the Athabasca Basin up there.
well, the headline here, this is a ripper. Creation of a leading Canadian development hub. Now, if you look at the map here where these operations are, I don't know how much of a fucking hub it is. You got Fission's project, the PLS in Saskatchewan, which is a bit west of the centre of Canada, and then Paladin's possible Michelin project, which is in fucking Labrador, which is in the far east. So it's all good when you put it on a small circle on a page. It looks like a hub, but they're not even close.
Well, they're just various spokes coming into the hub, and then
Mate,
one will be
it is
the next
JD,
one.
are you hearing synergies?
I am. Namibia, Labrador.
Oh, mate. But
Saskatchewan.
Synergies. Let's
Australia.
Let's play a snippet from yesterday's the M&A call that we heard. Here we go.
Our shareholders are going to see the same value in combining these two exceptional companies into one even more exceptional company. So certainly a situation where, 1 and 1 is significantly more than 2. I mean, this is 1 and 1 is 3, 4.
So apparently this is just a 1 + 1 = 3 or 4. Like, she's just friggin' like, you cannot get any more accretive than that. 1 + 1 = 3
That
or
is,
4.
mate, that's the most mayo I've heard talking about fucking it's like the merit of a merger that literally does not have regional synergies in mining.
Mate, that's like lifting GST to 30%.
I cannot believe we haven't listened to a call with Purds before. He was playing some great footy yesterday.
He's going real hard at the footy there.
He is.
I'll play the next bit.
Interesting deal. I was just wondering what the synergies are that you see between these two projects, if you could give a bit more detail on what they are.
Thanks very much for the question. Interesting. This is as Ross said, this is a 1 + 1 = 3 or 4. I'll be totally blunt on this. We're not looking for synergies. We're looking for growth. We're looking for the strategic rationale, and we're looking at the benefits for both shareholders. We intend to keep Ross and his whole team. They've got a fantastic capability in Canada. We intend to TSX list, which shows our commitment to the Fission shareholders, but also provides an opportunity to expand our footprint in North American equity markets. And we intend to put the resources into PLS.
So when asked directly about the synergies, the way they've explained it, the only synergy is growth by having more uranium. So that the uranium is the synergy. They said they're keeping the whole team of Fission, so absolutely no corporate synergies. More uranium. There's ETF buying synergies.
There was no pro forma board, mate, or anything in the details. So
Didn't say, but they
maybe
said
keeping all of the board as well.
Well, they said they're keeping
the team
whole
together.
management team, so which is probably a smart thing to do because you want to keep the Canadian management team that is
Permanent,
there
yeah.
bloody doing the project. So there might be some board synergies, but hey, there might not be as well. So now I love a good custom graph created. It's not too custom, but something to support any deal. The pro forma will be the third biggest holder of uranium resources globally, £544 million. Though, let's consider this Michelin project in Labrador of Paladin's, £127 million, but it's only 860 ppm, less than 0.1%, and it ain't an in situ recovery mine. It's an open pit mine.
Right.
So there's no in situ mining in Canada as far as I know.
Maybe put that one in being mined in 2100.
Yeah. They've got it coming on bloody 2035 or something. So, but anyway,
Gotcha.
it's pretty low grade. Then another £190 million of the 544 in good old Queensland and WA and good old Australia that won't let any bastard mine uranium in those states. So, but let's hope that the changes on the back of the Matt Michael Go Australia party might get that all happening. So, but anyway, so that's probably she's a bit skewed, that metric. If you take that off, they're probably down below UEC and stuff. So
Did you get to the bottom of? I couldn't see ERA on that chart of all of the listed.
yeah. So I actually looked. I think there was a footnote saying
Historical resources.
not including historical resources, but technically ERA is a current resource. I think ERA is 300 odd million pounds, so it'd be sitting around the next gen level. That's just for the Jabiluka.
Oh, okay. And they got Ranger Deeps as well, I think.
I'm not sure how much is there. I know. Yeah. So, some further comments on the call regarding which is interesting, any current offtake at Fission's PLS project. Let's play it.
Maybe if I could just ask about Fission, what offtake, is there any offtake agreements in place, and what maybe the plan is for you guys for the additional volumes that you'll add on?
Look, I might ask Alex Ryback to answer that one, our Chief Commercial Officer.
Yeah, thanks, Ian. So Fission have an offtake with CGN, which is one of the leading Chinese utility companies, on par with our partner CNNC. They're also an 11.6% shareholder in Fission, and they will become a smaller shareholder in the combined entity. So, we obviously, look forward to them becoming or being, continuing being a customer of the combined entity. And we'll have those dialogues with them after we close the deal.
So, as we hear, gentlemen, Fission have got a 20% offtake with the Chinese nuclear company CGN, and they're also an 11.6% shareholder. So, remember, they need for this deal 66.6% shareholder approval from Fission. No, conveniently, as always, no vote required for Paladin. You use your capital and your shares however you want. Shareholders will go along with it. So definitely need CGN on side. I thought I read somewhere last night, but I think I must have been pissed or something because I can't find it today. But I thought I read that they were indicating that CGN will abstain their vote and not vote on it at all. But they're not voting against it. But yeah, I swore I read. Okay. Yeah. Thought I read that somewhere.
I believe you didn't dream it, so I trust you, mate.
I might have. There is a good chance I did dream it. A lot of just like flakes of yellow cake falling on me while I sleep. Anyway, now don't mix CGN up with CNNC. So that's the Chinese national nuclear company. CGN Mining is actually listed. So, but CNNC were originally 45% shareholder of CGN when it first listed back in the day, but it doesn't appear they do anymore. So CGN operates some nuclear plants in China, have mining interests as well, such as this Fission one, also in some of the JVs with Kazatomprom operations in Kazakhstan. So, and remember, CNNC, the Chinese national nuclear company, they own 25% of the Langer Heinrich project. So there's a Chinese overlap with Paladin and Fission. So you would assume they'd be pretty fucking confident they're all aligned with that crossover there. So shouldn't be an issue, I don't think. Here's some fun fact history about CGN. In 2019, Big Trump put CGN on the blacklist because CGN, the Chinese global nuclear company, allegedly tried to acquire advanced US nuclear technology and material for diversion to military uses in China. So they got put on the blacklist.
Wow.
Can't sell anything to them. That was US. So these are Canadian interests. So yes, bloody love. How good is it, China? Interlopers, boys. Will there be any interlopers? What do you think?
Nah, it's a scheme, isn't it? A plan of arrangement. Yeah, it's pretty hard.
Yeah.
Yeah, the only one that has been mentioned possibly, but probably very low probability, Orano, after getting the boot from Imirara and not by Nigeria, whether they're looking to possibly grow more as they're in the partnership with Cameco for Cigar Lake and MacArthur River. And then, next gen and next door, but next door, 3 Ks away, but they'll just likely keep doing next gen things, I would assume.
Matty, I was very impressed with the validation you got on Twitter about
I was on fire,
your next gen sort of like tie-up theory.
People ran with it.
Yeah.
I couldn't believe it. I was just like, they're loving it. It's given me a lot of confidence in uranium lately, so fucking great, considering I didn't know fucking anything about it 6 months ago.
It really found your community,
Speaking
mate.
of my friends on Twitter, let's see what the bloody response is. This is a Trav-style segment. I'm bringing Twitter to this episode. I'm your son now. So here's one bloke, so almost across the board, holders of FCU, which is Fission, feel they are getting screwed on the deal, myself included. Given the overwhelming negative reaction, I expect that we might see a more compelling offer soon. And big Quakesy, here we go, nothing like a good friggin' broker report to really validate a price target. 8 Capital reaffirmed $2.30 price target. Paladin's proposed deal seems light, expecting shareholders to push for a higher bid.
That's an interesting broker report from a broker I've never heard of before.
Yeah, and I'd say, who knows? You just never know which brokers are paid for and which ones aren't. Cannot confirm or deny.
They all are.
This one, now this is where interesting point here. Big Alex mining guy said the relative value of the proposed Paladin deal is low, needs a higher premium. We should get a better explanation on the plan to unlock synergies with NextGen if this goes through. Big praise Keck. I like praise Keck. Me and him have become mates. His post effectively saying, is Paladin, are they betting on a future deposit takeover for the PLS project? Because why would they buy this one, effectively issue $1 billion worth of new shares and have to put another $1 billion plus capex into this project instead of taking out a Namibian greenfield project, which would cost way less? So, because I guess like for these all script deals, like how do we, how should they be interpreted? Like, are they paying the money? What's it costing them? Like, it's effectively they're raising 1.14 Canadian billion dollars, and instead of getting cash for it, they're getting this project in Saskatchewan, and then they got to tip in another $1 to $1.5 billion. So it's a big fucking raise and a lot of money to develop this project. So, but they've got the advantage of being helped along possibly with the cash flows from Langer Heinrich. They've got £6 million a year coming out from there, and that'll sort of maybe help with actually developing this project. But what is the end game, I wonder? There's so many ways this could go, and this interests me. Gives me a bloody hard on. Because the tie-up with NextGen or like that Arrow project seems bloody logical in some way, however it is. Like, why would you got these fucking uranium mines 3 kilometres apart, why would you independently build 2 facilities? Like, well, it just makes no bloody sense. It's already difficult enough to build one project in Canada. Why would you try and build 2? So the Paladin pro forma combining with NextGen in the future would obviously create a company that would produce a shitload more uranium than Cameco, heading towards a bit below what Kazatomprom would pump out annually if they got all 3 of those projects going on. But I guess another way to look at it, could Paladin, after this, if this deal goes through, could they be a target? And that's a bit of bloody word I'm getting as well. Because don't discount the chance that like a big oil and gas company like an Exxon might see this as a uranium as their clean future to, diversify fully out of your oil and gas. BHP might see this as a bloody good opportunity to get a global uranium presence and get positioned right next door to NextGen, commodity trading mobs. So Paladin could possibly get taken out before NextGen even gets involved in it. Who knows?
Yeah, you can't discount those potentials. I would say the BHP theory is probably pretty less likely given just how public they are about their commodity selection. It'd just be a bit of a rando pivot for them, which they're not really known to do. I know they've got honeymoon and all that sort of stuff, but
What if the political sentiment in Australia
Olympic
changed,
Yeah.
and BHP being an Australian company, and they then go off the back of that? Do you think that would happen?
They're an international company. They're sort of
Yeah, if you look at BHP and the way they talk about their commodity selection, it's all to do with the steepness of the cost curve. So, they put out so much thought pieces on these are the commodities we're choosing because we have done our homework on what the shape of the cost curve is, and if we choose the right assets that are in the lowest cost quartile, like that'll be like our moat. Ultimately, we'll ride any cycle, we'll make great margins along the way, and we'll be able to have high return on capital no matter where we are in the cycle.
Yeah.
Yeah.
Yeah. And so you're saying that you don't think...
I think they've looked at the cost curve shape of uranium, and they've done enough work to know that, it maybe the shape of that curve, maybe that could change over time with technology and all that sort of stuff. But like the way I interpret their thought pieces is we've looked at every potential commodity. These are the ones we want to be in because of the shape of their cost curves.
Yeah. And I think you look at Olympic Dam is like they wouldn't mine uranium there if they didn't have to. Like it's
all the framing
because
is a copper mine.
It's a copper mine, and it's because it's there. But they're probably making fucking good cash out of it now.
now
conveniently.
after a decade of not.
Yeah.
And on the oil and gas stuff, it's I mean heck that could totally see that happen. It could. I'd find
piss in the fucking ocean for Exxon.
Yeah, and I mean shareholders have historically gotten pretty grumpy every time these oil and gas majors have dabbled in mining. It's been they haven't created a lot of value in the process, but we'll see if that happens again because history tends to repeat itself in funny ways.
Yeah, I hope there's an interloper. Just give me more chance to talk about the biggest synergy between 555, which is the PLS project, and Arrow, both being underground mines close to each other. It's just one truck full of DSI ground support that rocks up. Then. No, one purchase order, one pick and slip, one invoice, one DSI truck. Supply both mines.
They are real synergies, Matty.
That is a synergy.
They're legitimate synergies.
Yeah, and I want to see this sort of stuff getting talked about. So
we know there's like a lake and stuff above you. You'd want pretty solid ground support.
Mate, and the best thing about those lakes, probably no salt, clean as anything. So
drink 'em.
The DSI, the galvanising coating wouldn't even have to do anything. It's just fresh as a daisy, so it wouldn't even be any oxidation of the friggin' splitties. But yeah, so that's
a good point. Very good point.
Yeah, so they could probably chuck black bolts in. They're the ungalvanised ones. Mate,
save yourself a bit
whatever,
of zinc.
DSI do a fully customised ground support review and advice session with all potential clients, and they will sit down, and when that truck rocks up, it'll be guaranteed the most cost-effective and fit-for-purpose ground support you can have. I just can't wait for it. Buddy, anyone that sees a DSI truck rocking up the site, take a photo of it, send it to us, just to confirm that your site is using DSI ground support. Beautiful. Now, NextGen on the same day, boys. Coincidentally, how convenient. They've tried to say that things are moving along with the EIS permitting. They've got through the completeness check. Yep.
I can't believe we're talking about this.
That's a big, the old C word. Whoa, the completeness check. Gee, this is a big one. Now, the EIS is with the Federal Indigenous Review Team. So to me, this approval still looks a long way to go. And I don't know if this was a coincidentally timed announcement. Here's a Twitter Barney for you, just to show opinion. A nail in the coffin of short seller arguments like PraiseKek, who casted doubt on the entire process and likelihood of approvals. A good day for NextGen. PraiseKek. fires back with a bit of a shot here. It's a completeness check. It's not even newsworthy, sir. The real review starts now. Your ad hominem attempt is appreciated. Yeah, good. Oh, this guy's called Mining Guru too, so he obviously knows what he's talking about.
Gotcha. Yeah. Must be Lee. Jokes.
So that's plenty going on in Saskatchewan. Possibly the best named province in the world. I love it. Saskatchewan.
I don't mind Labrador as well.
I always look at Saskatchewan and always thought it said like Sasquatch. Look at there's a YouTube video, I forget what it was. Oh, it's one of the Beastie Boys film clips, and it's like I think it's Kanye West at the end. He's like, I don't know there was Sasquatch. Anyway, we digress. JD Coronado,
And anyway,
back on the coal, brother.
Good work,
what is
Matty.
going on?
We're going to the Bowen Basin. So there was a deal announced back in September of 2023 that Sev.en, the family office of Pavel Tykach, is who's in and around many different sectors, but has done a lot of work in the energy space. He wanted to buy
Coal billionaire out of Czechia.
Yep.
Is where he made his fortune.
Where's Czechia? Like Czech
Republic.
But
Yeah.
real name's Czechia.
Czechia.
Yeah.
So when we say Sev.en, it's Sev.en.
Yes.
Not Kerry Stokes.
Correct.
Yeah. not Sev.en Group. Yeah.
Yeah.
So he had a deal, not with the company, with Energy and Minerals Group, EMG, to buy their private equity group from America to buy their 51% interest. They'd floated the business, I think, in 2018. So, like I say, Pavel has done a fair bit of work down here. He is notably the owner of the Vales Point Power Station in New South Wales. Also, the buyer out of bankruptcy, I believe, of Salt Lake Potash's assets, former Salt Lake Potash, as well as other power stations going. So Coronado stock closed on the day that was announced, I think it was the 25th or 26th of September of last year, quite a while ago, at $1.88. It is now trading at $1.19. That leaves it capped at about $2 billion. So for those unfamiliar, Coronado, Bowen Basin assets, they've got Curragh there, as well as 3 mining complexes over in the States in Virginia and West Virginia. 2 of them are operational. So Curragh isn't known as a world-class operation, and they're looking to expand it underground as well. There hasn't been a huge amount of success in the near vicinity there going underground. So, yeah, a bit problematic, which is one of the reasons they have underperformed.
So would you say, Trav, you're the met coal guru on the share market?
Mate, I've got a confession. I've actually once been on a Zoom call with Pavel Tykach.
Oh, have you?
I reckon it's the closest proximity I've been to a billionaire.
Yeah, right. I know one more, but I won't mention him. I know he's a half a billionaire on paper.
You were in the at the AGM with Chris, weren't you?
Yeah.
Oh, yeah, when your knees started knocking when he walked up next to you.
Yeah, I didn't have the balls.
Yeah, come on. Tell him what you said on the episode, Trav.
Hi, Chris. Nice to meet you.
Hi, Chris. Sorry about calling you doing dodgy shit. So would you say Coronado probably one of the more underperformers in this when the met coal was going off and Coronado didn't really hit the mark?
Mate,
Trav?
mad underperformer, like super underperformer, like lots of mate, like every other like met coal producer has actually been making money, and Coronado, even though met coal prices have been like super healthy, fucking don't make money.
Yeah.
It's as simple as that, right? And there's a litany of operational issues underpinning that, which have kind of been relayed by people much smarter than me on coal.
Yeah, right. JD, so what?
So the deal fell over.
She's fucked. Yeah, it's
Fallen
just
over.
fucked.
So a lot of people have been saying FIRB, pointing the finger at FIRB, and I reckon that's a good place to start because I don't think it was FIRB. I don't think that's the reason why this deal fell over. Sev.en, like we've just discussed, they've got multiple investments in Australia. They're not a stranger. Czechia, they're a member of the EU. I don't remember seeing any big falling out that Australia has had with our good friends over there. It very well could be right that FIRB approval wasn't received, but that could light the hands of those applying, aka Sev.en, and it just gives you a pretty easy thing to blame. So I think that kind of brings us to price. Like I said, the price has fallen by about a third since the agreement was penned in. That clearly makes it less attractive, and assuming there was that was struck on a fixed price basis, it leaves Sev.en being pretty frustrated that the agreement's set way above where the stock is now trading, and maybe they're looking to pull out of it. And to be clear, the underperformance by Coronado in recent times, Met.coal has pulled back a bit and just poor form operationally as well. So you might ask the question, why don't they just try and rework it? The chief, so not Pavel, but the guy who runs Sev.en, did come out with a couple comments saying that yada, 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 terminating the deal is in the best interest of Sev.en. The group doesn't intend to extend, renegotiate or continue with the deal, but the word sort of on the street is that they did try and renegotiate, but an agreement could have been formed. And maybe that the sellers, EMG, were just happy to wait for the next rise, and if they're bullish on Met.coal, thinking, hey, we don't need to sell this at a renegotiated lower price. Yeah. You will see in very recent times, Sev.en have had some frustrations with the Queensland government. They are part owners in Callide-C, which is a power station in Queensland. That had an explosion back in 2021. It seemed like a real lapse on the part of the government-owned the company that operates the other power stations involved there that led to that explosion. Sev.en have been pretty frustrated about how that's all gone on and how long it's taken for a report and so on.
I think that was where one of the proposed nuclear sites was Callide.
Yeah. I think you're right, yeah. So, circling back to the deal, I don't think that is the reason why Sev.en would back out of this one. And then you've got other conditions, because the document did say that the deal was terminated, pending certain conditions. So that sort of leads me to think about due diligence. Did the team get around there, look and see that Curraugh's is pretty hard going, that underground might be a bit harder than they'd first thought, and hey, hang on, maybe we don't want to spend $1.5 billion buying 51% of this company. I know before submitting a bid for $1.5 billion worth of a company, you would have done a fair bit of due diligence and you might have been able to, turn a few stones and find out what's going on. It doesn't seem to be a widely kept secret. I mean, we're talking about the fact that Curraugh's pretty shit. Like, people seem to know this out there. I'm sure they would have come to that conclusion. But maybe they did find out in doing real DD that, things aren't going all that well.
Yeah. What does Curragh account for in the NAV of Coronado? Because they've got the US-based assets too, right?
You're right, they do. So they do sort of, I'm not sure exactly in NAV. I haven't come across any sort of broker reports or anything, but...
very interesting. On the DD point, right? Like, yeah, I wouldn't be surprised if like when you're applying for you're kind of in control of that work stream. So if a CP of this transaction was FIRB, like I wouldn't be surprised if Sev.en, there was a different diligence item that's a real inhibitor of this deal being done, but they're kind of, using the FIRB CP as a way out of actually following through on the deal because, some other part of diligence didn't stack up. And if they fucking bought Salt Lake Potash, their capability to do proper DD mustn't be very fucking good. So, anyway.
I dare say this was a bigger check than the Salt Lake Potash one, but completely see your point. It's pretty interesting to see the reaction of the stock today as well. It's flat, marginally up, maybe one tick. So what does that kind of tell you? Firstly, investors saw this coming. It was reported a little while ago that this has been taking way too long, and there might have been a few hiccups. I know Sev.en weren't going to come in and run the show. Management was going to stay the same. Operations were going to look largely the same, at least in the near term. Maybe shareholders don't see as bad a read-through as what we might imply there on the operations, or in fact, it's all priced in already. So
it just sounds like Coronado just need to go a bit harder at the footy.
I think you're dead right, mate. I need a few more impact players out there to fucking get at it.
Impact players. Couldn't have said it better myself.
There's one more interesting bit of news around coal that I think we should chat about, fellas. And I saw this fascinating article come out maybe yesterday or this morning on the Fin regarding Vision Super. So Vision Super divested their stake in Whitehaven back in 2021 as it didn't meet their ESG targets. Now, specifically, that target was that a company cannot have more than 25% of its revenue coming from thermal coal. Now, what they've done is watered that down, essentially. So they've changed the filter to what does pass and doesn't pass the test. Now, rather than outright saying that if a company earns more than 25% of its revenue from thermal coal, it's not automatically excluded, it may be excluded from their portfolios. And I think this is very much in the same vein as what we spoke about with Sammy Berich and Dingo the other day with regards to Itochu. essentially ignoring their own self-imposed deadline on divesting coal assets, as well as the Kiwi government allowing exploration in the oil and gas place to continue after, I think, about 6 years of having it banned. So I think there's just a bit of a changing of the guard there. And it leads to two big outcomes. The first of which is that investors and corporates, I think, are going to continue to change their mandates. And they're going to do it quietly, just like Fission Super. You're not going to have a big announcement about this. You've told investors that you're not doing something, and now you're sort of changing the mandates. You're going to do that very kind of quietly. But at the end of the day, these guys get marked on performance. That's what really matters. And if certain parts of the portfolio start to slip, then you're going to see, hey, where can we get a bit of better returns somewhere else? And I think these actions kind of act as floodgates. And once one party or a few parties does them, they tend to open the floodgates, and we'll see it happen more and more and more. So, I mean, there might be a bit of blowback if investors do pick up on this, and Fission Super might hear it from a few of their contributors who hold their super with them. But I'll be fascinated to see if commercial banks follow the same suit and loosen their guards with regard to
finance.
Yeah, financing oil projects, gas projects, and so on. And the second takeaway is the multiples in which fossil fuel businesses trade on. So it's pretty simple. If you've got more capital chasing after a set amount of opportunities, there's going to be appreciation. And we have spoken about at length the super low multiples that coal businesses, oil and gas businesses trade on. And I don't think this happens immediately, especially while sectors like tech are performing super, super well. You just don't need to go to other parts of the market. In the States where a lot of the action happens, energy is just a few % of the whole index. So you can easily play in tech, do well, and not have to even face this debate. But maybe over the longer time frame, when you see a bit of fluctuation in the performance of certain sectors, it becomes a real sort of talking point. So just something I'm looking out for, and I just found that article really, really fascinating.
At the end of the day, why do you buy an equity security? It's for their future cash flows.
Yeah.
So you can buy fucking tech on whatever stupid multiples there are for cash flows that assume some growth rate that's a lot more uncertain than these, proven business models are able to do. I totally agree with your point on the probability or potential of multiple expansion in this sector. And I love seeing nuance come into the professional money manager landscape. Allocating money here is nuanced. It's not like met coal isn't the same as thermal coal. There's a whole bunch of the cost of capital for thermal coal. Sure, it makes sense for that to be higher, but there's no fucking substitute for met coal. You need it in everything. So anyway,
it's sort of interesting, and without voicing too much of an opinion specifically on it, it's just an interesting trend for us to follow, and I think we'll see more.
We'll be following it, JD.
We will be.
Don't you fucking worry about that, brother.
Go Australia.
Go Australia. All those the steel pipes needed to pump refrigerant fluid to freeze ground to mine uranium needs coke and coal to make it. Synergy. Good one to finish on. This one cracked me up. Couple of MD share sales, and on either ends of the spectrum, I'd say. Simon Lawson sold some Spartan shares to meet personal tax obligations, about a fifth, I think, of his stake. Good context, all good. Luke Tonkin, the new managing director of VRIFY, and I'm pretty sure it's just come out of escrow from the merger, dumped a bit under half of his stock in VRIFY. And VRIFY, coincidentally, were down, I think, about 7% earlier today. And I reckon he gives a flying fuck either way. So I just thought they were very contrasting MD share sales, which gave me a laugh, and can't say I didn't.
Mate, always open the change of director's interest notice. You never know what you're going to fucking find.
But it's just the second one just makes me laugh, because it's probably like, thought they were good value. Someone wanted to buy them. That's it. Even though half of his stake's only a couple of $1 million, he's not a big shareholder in the company. Put it that way.
Just a couple of bucks, nothing we'd get out of bed in the morning for. Hey, Matty.
It was just like change 50% good. That's it.
Play on.
It just made me laugh. Play on. Just good footy.
Alrighty. Let's wrap her up, fellas. We've got to thank VRIFY, who we had in the show, as well as DSI. We've also got GetWet Solutions, Silverstone, CRE Insurance, WA Waterboards, Brooks Airways, K-Drill, and use Spark.
How good was that Spark chart I saw earlier? Fucking good chart, eh?
Can't wait for drinks with the sponsors tomorrow.
We're bloody shouting them all because they shout us cash.
Yeah. Legends.
So,
Looking forward to that.
That's what we do. If you want to get your money back in beer, come be a sponsor.
Hoder it.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.